So yesterday we talked about a beginner investing strategy where you're just buying an index fund, dollar cost averaging into it over time. That's a great strategy and will yield amazing results. One leg up that you could go that could potentially yield, because historical returns don't indicate future returns, so we always have to caveat with that, but potentially is buying, yes, an index fund that will buy you, let's say 50% of your portfolio is in an index fund, and then the other 50% you could put it into 2 to 4 companies that you are a customer of. They say never put all your eggs in one basket, but what you could also do is put 50% of your eggs in one basket and watch that basket very closely. I like the idea that it's 2 to 4 companies that you are a customer of and that you are very in tune with, essentially. For example, for me, I have a nice position in Costco. I love Costco. I love it as a business. I love it as a customer. I've been very satisfied with my experience at Costco. So I started digging into their books. I started digging in. These are all publicly traded companies that we can go find information on if we want it. I started looking at their revenue, started looking at their earnings, started looking at their balance sheet, and I saw that this is an amazing company with plans for expansion internationally. They already own most of the United States market, and they're expected to continue to produce like this for decades to come. So I was like, gotten pretty decent returns over the better than what you would get just in index fund over the last 5 years. Plus, I was like, what would cause it to change? And would I know if something started to change? Well, I'm a customer. So if the experience started to deteriorate, their pricing changed, their models changed, right? I would see that as a customer. Peter Lynch talked about this, and I don't remember exactly which book. I think it's One Up on Wall Street. But if you're already a customer, you kind of have a little bit of an inside edge on Wall Street because the market will react when the headlines come out. But you're in the business essentially. So now if you just justify it with the numbers, it's like could be a very attractive potential return. So that's another strategy that you can use. Let's say 50% of your portfolio in index funds and then 50% in 2 to 4 companies that you are a customer of, ideally that you love already and that you can watch very closely over an extended period of time. Tomorrow we'll talk about an even more in-depth strategy that I wouldn't recommend for most people unless you're somebody potentially like me, even though I use this strategy mostly, the one that I'm talking about today, unless you're somebody who's really, really into investing and wants to do a ton of reading and researching. So stay tuned for that tomorrow.